Welcome everyone to the Kendall Report. It is Wednesday night, another exciting day, lots of swings going on in the markets. It's been an amazing last few days, to say the least. Today, on Thursday, we're going to have the first look at Q3 GDP. The title of this video was, Will It Surprise? And I think it will surprise, but the surprise, either way, we're going to be in good shape. Good news is going to be good news, and bad news is going to be good news. And I also want to continue this dialogue with you folks, and I've said this several times and get pushed back on a lot, is that really what we're seeing here is all of the other banks, the BOE, the Bank of Japan, and now the Bank of Canada are all starting to pull back or do things that are dovish, and the Fed isn't going to have to do it. So they're using these other banks as a proxy. I believe there is a strategy going on here. I don't think these things we're seeing are by accident at all. And I'm going to stick with that one no matter what. And I do think what we're going to see from the Fed next week is they're going to do 0.7, and all this other stuff is changing sentiment. Look at the rally that we're able at least to attempt at early in the session around the BOC action, or lack of, I guess we'll say. So I just think this is going to be a continuing dialogue as we go forward. So GDP is expected to come out at 2.3 plus. So we had two negative quarters. Now we're getting a positive quarter. Does that mean everything's okay? Don't think so just yet, but it really comes down to, we come into next week and the end of the week and we get employment numbers and all that stuff. They're still going to keep playing out that this is going to be proof that we're not in a recession. And we're seeing some crazy stuff happen. Yesterday the S&P was down 0.74 in the end, was positive for a while. NASDAQ never got close to positive, finished down 2.04, but the Russell is up 0.46. And the Russell continues to show that it's stronger. And I think a lot of this has to do with just the flattening a little bit of the 10-year settling down here and not doing a lot is really helping these small cap stocks. So I think folks are also looking for value in the markets, and the small caps have been probably going to represent more value, obviously, than things like Microsoft that was down 7.7% today. Then we had, of course, Meta come out after the close. It's down 24.5, 24.15. And then, of course, Google and Alphabet down roughly 9.6%. So the large cap stuff, remember the FANGs? The FANGs, I don't know, we have to rearrange the letters maybe and come up with a different acronym. But we also have an absolute ton of earnings coming out on Thursday. Before the market, we've got MasterCard and Merck, and there's a bunch of others. There's 373 reports coming out tomorrow on Thursday. And then after the close, we got Apple and Amazon. And so those will be interesting, setting this up as we come into Friday morning. So just a ton of stuff going on here. From an economic standpoint, we did see mortgage apps down 1.7, but interesting enough, new home sales was actually a little better. It was expected to be 575. It was 603. I guess they're getting so negative that they're now overestimating how bad it is. So we're finally starting to see maybe some stability there, and especially if rates start to stabilize as well. And I'll talk about that here in just a few minutes. But we're really looking at one of the other elements that is out there is energy continues to do well. That ETF hack that I've told you folks about is back almost up 40% again on the year. And it's really starting to scream back as a lot of these XLE stocks are doing really, really good. And they're going to continue to do good, as I told you, anything over 75 is going to flow a ton of cash to these guys, regardless of what the administration says and how they're gouging everybody and all these profits and all that stuff. So there's really not a lot more to focus in on except for GDP and the reports I just talked about. So we should have plenty of activity, and the 373 earnings report. There's a lot of intermediate to larger companies reporting. So it's going to be a barrage tomorrow. So I suspect, as I've been saying, that the estimates coming into the earnings were so terrible that it almost has to be bullish. They were so bearish it has to be bullish. So bearish equals bullish right now. And especially when it comes to earnings, these things are just being way underpriced. But here's the deal. I mean, you look at Meta, that was a disaster. And it was interesting because it printed up to, I think, 140 on the spike. Those of you who've been in the live trading room, I've taught you about that big news story, how to sell the spike or buy the spike. When you buy or sell the action, take the other side of the reaction. Today would have probably got you short at 135 plus, and here we are at 104. So it was a great trade from there. So let's go ahead and get into the database and start to look at, get through tonight's broadcast. So we continue to get some traction here. And we're seeing 1,113 buy signals, 83 sells. We're up to 34.64 on the bullish percent on the short term. So we're continuing to get quite a bit of traction here, folks. And you'll see when we get into the technicals, looks like we're probably still got an underlying bid, but we're going to start to see more of a consolidation phase start to set up. And this will all be determined as we get through all these earnings reports that are coming out today on Thursday. But there's really no real big rotation or anything to expect here other than I continue to expect to see us move towards a 42%. We get above that, then we've got a real trend going that's going to have some traction and continue to move forward. First, we'll go through the S&P. The algos are starting to suggest that we've got another day or two where we're going to see positive upward slope. The PPM1 is right now at a 0.45. Anything over 0.25, that's in the white here on the right-hand side, is a upward trend, and it's a confirmed trend, anything over 0.25. So that's going to continue for at least 2 to 3 more days, and that average is going to start to come up underneath this action. Right now, it is going up at roughly 14 handles per day. So it's going to be up at around 3780, 3797 is going to end up to be substantial support underneath there. It also will flatten out somewhere around the 40-period moving average, which you can see PPM1 has, PPM3 has actually has penetrated its first, second derivative, and it looks like all of the algos are going to stay positive for several more days, and that should keep the upward slope in this pattern going from there. I'll go over to TradeStation just for a second here. And let me get to the right page. And we got a buy at 37.71 on the 24th. And as I mentioned, this trade is likely to last somewhere around 24 trading days. So that's the better part of going into mid we're just going to call it probably about mid-November that we're likely to see this market just continue to crank along here from that standpoint. So we're going to see, in my opinion, we're going to see it flow right along these moving averages, and the next pattern that we set up in the next, we're just going to call it probably into Monday or Tuesday next week, we'll set up exactly how we're going to go. And of course, we have the big Fed meeting coming in that same time, the same expectation there. Just going back to TradingView, taking a look at the algos, like I said, they're showing some weakness. The weakness that it looks like is coming in, really, even 3 or 4 days out, we're still going to be in trend mode. And that's exactly what we should see, is this pattern start to stair step. And I think there's becoming more and more probability that we may actually end up getting to the 200-day moving average. And that right now is at 40.75. So the most likely scenario is that, well, early next week we'll probably trade up into the 39 handle. Now this will all be based upon holding the key support right now at 36.97. I'm sorry, 36.97. So that will be your key level on the downside here. Let me get this, make sure I got this number right here. I said 36, it's 30, it's going to be 37.13 to 36.97 is going to be the support range. Just want to make sure I get that out there right. So that's going to be where, and if you see those prices, it's a buy if you see them down there. So don't let them scare you, because that will be where the buy is at. Next, we'll cover the NASDAQ. NASDAQ has a similar pattern, even though we had that massive downtick. We're actually up 0.25 right now, and we're trying to stabilize, but we're stabilizing just below, in between the 10 and 40 period moving averages, 11,276, and the 40 is 11,588. We've had a low of 416 overnight, but we should stay within those numbers here. And at least, like I said, the same scenario that's in the S&P, we should stay above that 10 period moving average should be your major support. We're looking at a plus 0.34 on PPM1. Now, PPM2 is slightly negative, but it's flat, but it's also virtually at the same value. 11,237, 11,276 is the 1021. That should be your major support, and I would look to that area. If we get down in that area, that'll be a buy. There's a good chance we're just going to go sideways. Market grid turned down after yesterday, and if we can stabilize, we should see a flattening, or what I call a box formation, which just tells us we're going to consolidate for a couple of days, but we should be able to stay above that 10 period moving average. As I mentioned earlier, the Russell is got a slightly more bullish pattern. Matter of fact, we're getting close to the 200 on the Russell right now is 1870. The last trade is 1819, but I think we should continue to move up. We actually we've satisfied fib target 2, and that number 1830, we went to 1825. So basically we printed 1844 yesterday. So tonight we're at the highs 1825. We're looking at the possibilities for the patterns here, and on all these probably being S1 on the upside. I'm sorry, S1 on the downside. R1 is going to be the pivot. It's going to be a tough call, and this goes with all of these patterns that I just mentioned on the NASDAQ as well as on the S&P. So check your numbers there on that stuff when you use your indicators and the market grid. That'll get you set up for that. But the patterns here are still very positive. And like I said, even when 4 or 5 days from now, when some of the upward momentum is going to likely dissipate off here on the short term, we're still going to be in trend mode as we go forward and coming into next week, which suggests that we're likely to see some pullback and then a bounce off of there and a resumption of the uptrend. Next, we'll cover the 10-year. And as I mentioned, I thought we could get down around 404, possibility of getting around 4%. Well, we did that, and it's a daily chart. And the low yesterday, 399.7, it didn't seem very realistic. Let me bring up the tablature so you can see exactly what these numbers look like. Yesterday, the STX was 398.40. I didn't think we'd get close to that. We actually closed at basically at S3 at 401.30, and the pattern just completely rolled over. All of a sudden, the PPMs are negative. They've cut through their first, second derivatives. Everything's starting to flatten out. And I think I'm going to go to the weekly chart here, and the weekly is really setting up this mode from the standpoint of the pattern. As I said, we're going to go into this big upward consolidation here, and right now we're looking at S2 is where I was talking about the 404, S3 395.7. That's certainly a possibility, and this 10-period moving average is screaming up underneath here at a plus 2.88. So that's a monster trend. So in the next 2 weeks, we should see stability right around, I don't think we can get much under the 395 area, if that. Ultimately, I'm going back and forth here, going back to the daily. We still have those fib targets up there at 5%. So I think longer term, we're still going up. Right now, we're consolidating, and we've hit basically the max level at the moment. And especially ahead of the Fed meeting, we're just going to see some folks just squaring up positions and getting ready for the Fed as we come into next week, because that is all what it's all going to be about from this standpoint. So we'll take a look at crude oil next. And crude had a really big day yesterday. I was talking about the 82.92 level. We're right back here. We closed at 87.91. We're currently at 87.98. I think we stay below the 200-day moving average, which right now is 91. So we should stay 91, 92 will be the peak level if we continue to rally here. However, having said all that, we do have fib targets right now for high target 198, 105, 109. So we definitely have some potential upside from here. But I think if we can get to the 91 level, is going to be pretty strong resistance, 91, 92. And I'm still going kind of an 82, 92 range. And I mentioned the patterns on the XLE, and it's just a very strong pattern right now. Let me go to the weekly. And weekly has a very interesting formation. Still have basically there was big downside on the PPM1. It was actually very negative over here. It was down at a minus 1.8. Now it has flattened out, trying to turn up here. The PPM2 is still negative, and that's right where the 91.64, 92 level is where the major resistance is going to be. So I don't see us getting above that with a minus 1.22 ppm level. The probabilities are only about 20% for it to rise above that 91.60 level. So look at that as a ceiling in this market. We also have the 40 right there at 92.41, which is flat. But this pattern is really more of a sideways pattern, and it's likely to stay like this for just a while here. We're going to go over to the algos for a minute. And the algos on the daily are suggesting that we have a few more days of strength. Like I said, I've got the Fibonacci Wavetech Fib projection tool. It's projecting right now that Fib target 1 is right at 98.69. The 200 right now is 98.87. So we do have projections for it to go up there, and it looks like we're going to stay reasonably positive. The moving averages, everything are starting to turn up. So this is going to supply support from 85 probably up to 87 over the next several days. Are going to be your bottom end support here on the crude oil. Next, we'll cover gold. Gold is starting to get interesting. The algos, this is the daily, all of a sudden are getting bullish here. And PPM1 is starting to project that we're going to see the 10 turn up, the 10 period moving average 1654. So we are trading right now at the 1667 level. As long as we stay over 54, we're going to start to see these moving averages try to turn around. The PPM3 is being projected to get positive probably over the next several days, and we got some new upward Fibonacci targets here right now for 1737, 1782, 1809, which also puts us at the 200-day 1814. So we're starting to see some interesting patterns set up. I'm going to flip over to the weekly, and I've been talking about this as well over the last couple weeks, as the algos are suggesting that PPM1 is going to become penetratable somewhere around in the next 2 weeks. And then that sets the tone for the move up to the targets I just talked about, getting toward the 200 week and the the 200 week is right now at 1732. So that's going to be a target for this market to move up to as we go forward here. Finally, we'll cover Bitcoin. Bitcoin is still looking like we're going to challenge some higher numbers. We're right now at the 2775 level. We have resistance right here. There's quite a bit of it. Actually, this is the weekly, and that is at the PPM2 is down 2.02. And we're looking at the 21 right now at 21.037. So we're getting right into resistance. We're likely to stall a little bit here. Let's go over to the daily and just open this up just a little bit. Hang on, I got to fix the scaling. So yeah, you see the daily, we had some Fibonacci projections here to the upside. And it's been so quiet. It's just been almost like you don't want to believe what you see when it comes to Bitcoin, because we spent so long in this trough here, in this pattern, and now we're finally seeing it increase. August suggests we got another couple of days up. The upward targets 24.27, 21.097, which puts us right on that 21 period moving average, and then Fib target 3 is actually 21.514. And above here, this is the daily. We've got huge downward pressure with the 200-day coming down above here. But the algo suggests we're going to continue to see several more days of positive tone in this market. Maybe we get into consolidation, and there's another. From that, we'll burn off some of that weekly downward pressure that's out there. We're coming into Thursday, and as we come into Thursday, what we're likely to see is, especially when it comes to Bitcoin, is that we're going to set up the weekend and then come into next week. It's all about the Fed, folks, going forward. There's nothing going to come over that. Tomorrow, like I said, we've got GDP. We've got a couple things coming out here from the standpoint of news, and 376 earnings reports, all that stuff. So Thursday's going to be a pretty big day. So those of you that are in our live room, I'll see you there at 1 o'clock. Looking forward to it. And we've got a big day ahead of us. So hopefully we can get some good trading done and figure out what's going on. But anyway, folks, I didn't mention earlier, but make sure you hit that like button, subscribe, and hit the notification bell so you know when I come live. Anyway, folks, thanks again for watching. We'll see you tomorrow night, same time. Those of you in the live room, we'll see you there. And remember, you do get the indicators by going to Kendall Report /indicators, and you get it 30 days in the live trading room included with the purchase. It's a one-time fee. It's not a subscription for the indicators, but the live room is a subscription, but you get a first month free. Anyway, I hope to see you there, and we'll talk to you all very, very soon, like tomorrow night. Thanks a lot.